Hey guys, this is Kenny Winter with Winter Homes coming to you again. I told you when all this started a few months ago that we come every month and we bring in a market professional and we tell you what's going on with interest rates and the housing economy and what our advice to you would be moving forward on trying to buy a house. So my market insider this week is Leo Gilliland from Merritt Bank, right? I always struggle with his name a little bit. So,
Got it.
But he's been in the industry. How long have you been in the industry, Leo?
I've worked in the financial industry total about 18 years.
So 18 years, been around a long time. Like I said, I've been in 22 years, so 40 years combined experience together. And we just want to talk to you a little bit about the housing economy. We had some good news yesterday that came out. The Fed only raised rates 0.5 point, which is what everybody was expecting them to do. And so I wasn't shocked by that. That's what we were kind of expecting, right?
Absolutely. I think we're still in the high fives, low sixes. We've sort of managed to maintain that over the last month or so. We've seen them come up and come down. News sort of starts. News leading into these Fed meetings always sort of creates a little bit of turmoil in the industry, but for the most part, they've come up, they've come down, and we were sort of right back where we were.
And I think that's pretty much where we're going to be.
I think so too.
And so, I was doing a lot of homework last night and just getting ready for this meeting today so I could give you guys good advice about what I think you should do. And, rates, other than what's happened since 2008 when the housing bust happened, rates have been in the 6 and 7% going all the way back to 1971. And that's basically, we're lower than that today, right?
Sure.
And so it's kind of hard for everybody to digest 6.25% because they've been so good for so long. But let's talk about why they were so good for so long. In 2008, we had the housing bust, right?
Right.
And so the best way to get the economy going back is low interest rates so people buy houses. And then we had COVID in 2020.
Right.
And so, everybody knows why they had rates down to keep the economy going during COVID. So to me, we're just getting back to normal. I think Leo would tell you and I would tell you that 6% is going to be the norm. You want to expand on that?
Yeah, absolutely. And you touched on it perfectly. The average rate across time and existence since we've had a mortgage industry has been in that 6 to 7% range. It was great. It was fantastic to have rates where they were. A lot of people's friends and family, they're going to tell you probably for the rest of their life how they got that 2.5% interest rate or they got that 3.5% interest rate at this point in their life.
Absolutely. I mean, you talk to people from the 80s. How many times somebody from the 80s have told you that they paid 17%?
Yeah.
Well, now, the next generation is going to hear people from the early, the 2020s. They're going to tell you about how they got a rate for 3%. So I think it's just going to be a 10-year period in our history where mortgage rates are going to be as low as they've ever going to be and ever going to be. I think it's going to be a great time for the people that are buying houses during that period, but I think we'll never see it again.
Yeah, absolutely. But back to your other point, a lot of it's perspective. Yeah. If you're a millennial or younger generation, your entire experience up to this point has been rates in the 3s or sometimes in the 2s. But thankfully we've got other generations, and we have these conversations all the time, with home buyers that are calling to refinance or buy their next home, and you start talking about rates and you're worried, how does that conversation go? Well, most of your baby boomer generation surprise you and they say, oh, no, I'm not worried about that.
Right.
Let me tell you about the rate I had on my first house.
Right.
And I think perspective is everything. I think understanding that this is where we need to be, this is where the economy needs to be, and it makes everything healthier. But perspective also in what's that's going to do for you and your home and your financial picture long term is just as important. The ability, instead of spending $1,500 a month for 5 years and spending $90,000 on rent, that's 100% interest. That's money down the toilet. That money's gone forever. Versus you could put that same money with very little money down, depending on the program you're using, towards a mortgage, towards a reasonable home, and that house continues to appraise in value or increase in value over time. And once again, you're realizing the joy and the dream of home ownership, which is most people's largest asset they're ever going to own.
Absolutely. absolutely. I mean, that's how you borrow money. The first thing you do if you need college tuition, your kids need braces or anything, the easiest way to go borrow money at a bank is if you have an asset to pledge for collateral.
Absolutely.
And that's a house. And so we have one of the highest. And another thing I was looking up last night, 66% of America owns a house. That's higher than Germany, that's higher than France, that's higher than Italy. So that is the American dream. Is to get established, go to school, get an education, get established, and own a house. And so, but you're gonna have to pay 6% to do that moving forward. I really feel that way. So I want to talk to you today about why you need to buy a house and the current state of the market. And so inventory is still as low as it's been. We don't have as many buyers in the market as we've had, but there's not a lot to choose from still. So there's not a ton of options out there. So that for the few buyers we have had over the last couple months, they still don't have a whole lot to choose from. But one thing you are getting is you're getting concessions from sellers. And so, a year ago, we were looking at the average purchase price was about 10%. You're paying a 10% premium. So if you're buying a $500,000 house, you're paying about $550,000 for that house. And you weren't getting any concessions. You weren't getting a fence. You could be saving with the 10% premium and the concessions you're getting, you could be saving $60,000 or $70,000. And so last night I ran some numbers, and does anybody want to guess how many payments you have to make up $70,000? And so it was 104 payments that you would have to make up $70,000. So if you're saving $70,000 on the front end because you're buying in the market we are today versus buying in the market we were 12 months ago, you're 104 payments better off.
Wow.
And so I just wanted to bring
That's
that
real
up.
money.
That's real money.
Mm-hmm.
So like we talked about in one of the earlier episodes, you can change your rate. You can't change your purchase price. And so another thing I want to touch on is local lenders. And so everybody's really focused on interest rates right now, and 10 basis points is 10 basis points. But you're dealing with a national mortgage company, and the first thing they do is they hire the cheapest appraiser that they can get. And they have zero idea what's going on in our market.
It's their big operations spend a ton of money on marketing, and that's where they get you.
Yeah.
If you're Googling mortgage rates, they're the ones you're going to see, and what they put in the fine print is 2% in points.
Right.
Most people don't understand.
Right.
So it gets them confused about where rates are. What you find more often than not is people are getting to the closing table with a nationwide lender, and they don't understand what they're paying for. They haven't had anybody walk them through the process, help them understand what is lender's title insurance. Why am I spending $500 for an appraisal or $450, what have you? But why are taxes the way they are? And for a first-time home buyer, these things are foreign, and even for subject matter experts, seasoned professionals, some things come up and we're like, well, that's a good question. Let me see if I can get the answer. But I think just having the ability to have a conversation with somebody local that's invested in your ability to buy and be happy is everything. Right. And what a lot of people lose in that is they believe that there's this perception that because you're bigger, you've got more products and services and all the bells and whistles that a local company or a small company can't handle, and that couldn't be further from the truth. Right. We're a community bank. We've got all the bridge loans and equity lines and portfolio products and construction loans, and we can do all of those things at the same time. We've got very competitive mortgage rates and very competitive costs when it comes to closing on those loans. So I think the big piece there is I want you to call me back when you're buying the next house. I want you to have such a good experience that when after all is said and done and you've had enough time to go back through and see that you got a great deal and you understand what all that paperwork says, that you say, well, you know what, Leo, Merritt Bank, they did everything the right way. I'm calling first. Right. When I'm looking for that next house, when I'm trying to get Kenny Winter to build me my bigger house, I want him to call me back, and we want to be invested in that process. So,
and we're going to see you at church.
That's right.
And we're going to see you at the grocery store, and because you're an active part of our community.
Sure.
And so it's not a one and done conversation. You're never going to see or talk to these people again. You care about the overall process and how that transaction goes down because you're going to see that person because you're a part of this community. They're a part of this community. Anytime we get a commitment letter from a national lender or whatever, the first thing that we do is we send that customer to one of our preferred lenders to make sure that with your underwriting standards that this customer qualifies, because we've had certain situations where, people have dealt with a national lender, and, they don't check all the boxes. We want to get you to closing. We want your house to close on time. We want your title work done on time. We want your loan sitting there waiting on you. We want the buying process to be smooth, and we can't do that if you're using a national lender we don't have a relationship with. That's why we push all of our customers to our preferred lenders that are local, in town, part of our community, and they help us with every transaction. They're part of the transaction. We can't do it without you guys, so we appreciate that.
Yeah. That transparency is everything, and it's everything we've just sort of been talking about with, and what you see primarily in our industry. If the average person goes online right now and they Google mortgage rates, you're going to end up at one of 4 websites that have a lot of lenders on there that a lot of their names start with online, or they'll have acronyms, or they're a large servicer, or they'll tell you they're a veterans preference sort of industry, whatever. But they all obviously serve their purpose, and they've done well. But you'll also notice when you're looking at the rates, maybe they're a little bit cheaper, but right below that in fine print, you'll see those points, 2 points. Well, that's a percentage of your loan amount. Right. That's real money. That's and in a lot of cases, depending on and every financial situation is different, but in a lot of cases, paying points, you're not going to start realizing the interest cost savings depending on how much you've paid and how far that rate was able to be bought down. You won't start seeing the actual interest rate savings for sometimes 3, 5, and more years. Right. And how many people are staying in their house that long? Or did they have a need to refinance during that time frame? And any time life happens, you have kids, that housing situation changes, well, those points you paid for that mortgage, that's money out the window. You refinance because you've got a better rate long term now. Well, as soon as you refinance, the money you paid on that original mortgage, those points, that money's out the window. So it's not always better. The marketing that's out there, it does allow people to kind of get a little bit more educated, but exactly what you said though. In a lot of cases, your lenders aren't telling you what does it cost for me to get that rate, and I think it's just as important.
Yeah. And Leo, you guys have a great VA program, right?
We do. I've spent 20 years in the military myself. I'm a veteran. We spend a lot of time talking to veterans. There's a very active military population here in North Alabama that we're super proud of. And the DoD personnel that are moving to this area, a lot of your contractors are retired military personnel that are moving here, and they have that VA eligibility. I tell you, in the amount of time we've been in Merritt Bank's about 3 years old. We're headquartered here in North Alabama. In the amount of time we've been here, we have yet to be beat in rate and term for a VA mortgage, and I stand by that. And so long as we're able to operate that way, we're going to make sure we're taking care of our nation's veterans and helping them understand that transition.
And they've raised the FHA loan limit as well, correct?
They have, absolutely.
And so it's up to what, $750,000, $40,000?
I believe so. The conventional loan limit, yes, it's going up to $715,000, I believe.
Okay.
But with that, your FHA and your USDA and some of those lending limits will rise as well. They were in the mid 400s this last year, and they'll continue to go up. Those are some of your first-time home buyer programs, the FHA, USDA programs.
5% down.
Yeah, conventional you can put down as little as 5%. For first-time home buyers, that can be down to as little as 3% in some cases. Right. If there's some income qualifications and other pieces that need to work there, but first-time home buyers can put down as little as 3%, FHA 3.5%, and depending on where the property you're buying may be, USDA is another fantastic choice.
I mean, I think it's just an unbelievable program that you can buy a house up to $715,000 and potentially only put 3 to 5% down.
That's incredible.
It's an incredible program, mm-hmm. And so everybody's hitting the floor about the price per square foot in North Alabama, but we're way below average.
Absolutely.
And so North Alabama is still a great place to buy. We're around $200 a square foot. Average. I think national average is around $222 or $225 a foot national average. But you go 80 miles north in Nashville, you're at $290 a foot average.
And more, yeah.
80 miles up the road, you're 90 $90 more on average. You get into Brentwood, you're $500, $600, $700 a square foot. Franklin, $500, $600, $700 a square foot. That's 80 miles up the road. You can live here, and there's great resources here in Alabama. A lot of jobs. There's plenty of jobs coming here. There's jobs everywhere here in North Alabama. You got to not want a job to not get a job here in North Alabama. So I think, over the years, over the next year, next 2 years, I think we're going to see more people moving in, which is going to make that housing inventory even smaller than what it currently is. And so the time is now to buy a house. Rates are not going back. I think if you left here today, the message from me and Leo would be, this is the new norm. 3%, we'll probably never see that again in my lifetime. Like I said, from 2008 to 1971, that's 30-something plus years, it didn't go below 6%. So that we had some situations between 2008 and 2020 that drove those rates down. Hopefully we'll never have those situations again, like a pandemic or a national housing bust. I hope I never see that again. And so the rates are back where they should have always been.
And so you have to ask yourself, do I want to wait? Keep waiting for this crash or for rates to get back down in the threes, or do you want to go ahead and buy now and start realizing the real money here, which is the equity? It's the appreciation and value in your home, and start doing that now. Or do you want to keep throwing your money away on rent every month?
So I hope we've given you some great advice today. Walk away from this video knowing that I think rates are here to stay. I don't think they're going to go much higher, but they're certainly not going to go much lower for the foreseeable future. If they do, if you bought a house today at $575 and rates do go back to 3%, you refinance, right, Leo?
Absolutely.
All right, you can change your rate. You can't change your purchase price. So if we get in a situation another year from now to where we have an inventory shortage because all these people are moving in like we just talked about, and you're paying $50,000, $60,000, $70,000 premium over the purchase price of a house like we have been over the last year, again, 100 payments to get that money back, all right, versus buying a house today, and if the rates do fall like unprecedented like they have over the last several years, then you refinance. It's an easy step. Those closing costs, you can refinance those closing costs back in your loan, and then you didn't pay any closing costs on the front end because all your sellers today are paying closing costs because we're giving you guys concessions. And so that would be my message. The key to building wealth is building equity. And so you can't start doing that until you buy a house and buy something. It's like leasing a car. You're not building any equity if you lease a car. Well, same thing with a house. You're not building any equity if you're leasing your house. And so rates are not bad, over the history of our industry, of the mortgage industry. It really kicked off in 1949, so it's about 70 years in the history of our industry. High fives, low sixes. That's been one of the better rates over the whole history of our industry.
This market is insulated to some degree in that people need houses. There's more people here than there are houses right now, and that's the whole idea. That's the equation.
Yeah.
And that means that prices are going to keep going up. And we've got all of this extra runway for prices to continue to increase. So, writing on the wall, take a 6.5% interest rate, make 20% on your house in 3 years, 4 years, and then sell it and move on to the next one.
Yeah.
And then refi when rates get better.
I think we're going to see a lot more people moving in over the next, year to 18 months because people are going to be moving here and taking advantage of these jobs.
Absolutely. And get away from, the economies of where they were. And that's the more, the longer and the more the message of what North Alabama is gets out to the world, it's not slowing down. Companies that have been here for 20 plus years, they're still growing their programs and their production lines and their manufacturing lines here.
Leo, you had a lot of great advice today, a lot of good information. Thank you for coming out. I really appreciate it. Absolutely. Merritt Bank, he's a local lender. He's here in our community. He's highly invested. Give us a chance. That's all we want is a chance to work for you to see if we can find you the house and the payment that you're looking for. Thank you.